Hello everybody, another week, another dollar. Today is Sunday. Hope you're all enjoying your weekend. We got a lot going on in financial markets in the coming days. So without further ado, these are the top 5 things I'll be watching. Kicking things off with number 1. The coronavirus crisis will once again remain the biggest driver of sentiment in financial markets in the coming days. The spread of the virus is showing no signs of slowing down. More than 310,000 people around the world have now been infected, with the global death toll topping the 13,000 mark. We saw a sharp spike in new cases over in Europe and the US over the weekend. So taking all that into account, we'll continue to monitor updates on the number of new daily infections, especially in countries like Italy and the US, of course. So that will obviously continue to dominate market sentiment. Another thing which could dominate market sentiment will be headlines regarding further fiscal stimulus measures from governments around the world as they step up measures to contain the economic impact of the crisis on the world economy. So we'll see. We got headlines over the weekend saying that the U.S. Senate is negotiating a stimulus package worth more than $2 trillion. So keep your eyes on that front. We'll also see if the Federal Reserve has any more tricks up its sleeve after the U.S. Central Bank last week stepped up to the plate multiple times with emergency measures in order to provide liquidity to global financial markets. So with Jay Powell at the helm, anything is possible with this Federal Reserve, so keep your eyes on that front. On to number 2, with one of Wall Street's most volatile weeks on record now in the history books, markets are bracing for more big and wild daily swings in the days ahead. Unofficial data shows that the Dow is set to drop 600 points, or around 3%, when futures markets open on Sunday night. That follows a week which saw the Dow plunge 17%, its worst weekly performance since 1931. The S&P fell 15. The S&P 500 fell 15%, taking it below its December 2018 low and breaking a multi-year trend line, which could signal further losses ahead. Volatility is likely to continue to remain elevated until we start seeing indications, of course, that the number of new daily infections around the world is starting to drop off, and perhaps we start seeing some light at the end of this coronavirus tunnel. On to number 3. The data in the US is about to get really ugly for the economy. Never has there been so much focus on a weekly jobless claims number as there will be this week when those figures are released on Thursday morning at 8:30 a.m. Eastern Time. Estimates are ranging from as low as 300,000 to as high as 1 million. Yes, you heard that right. 1 million. Investing.com's economic calendar forecasts are showing a gain of an expected gain of 750,000. That would take it above the all-time high seen during the week of Hurricane Sandy back in 2012. Also keep your eyes on global PMIs, which will be released on Tuesday. We'll get to see the impact of the coronavirus crisis on the global manufacturing sector and perhaps just the tip of the iceberg for just how bad things could potentially be in the months ahead. And on to number 4 in earnings. Nike reports results after Tuesday's closing bell. Investors are hoping that the company could shed some light on just how bad the impact of the coronavirus crisis has been on the retail sector. The stock is down 36% from its January 22 high. So obviously investors are pessimistic going into this earnings. We'll also see just how pessimistic management will be regarding the quarters ahead. So obviously with the coronavirus impacting Nike, they did announce a number of store closures around the US and in China, obviously. So we are expecting a downbeat report from Nike when they report this week. And finally, in oil markets, it was another week of a massive turbulence, turmoil, and volatility. The price, US WTI prices just got slammed last week, tumbling 27%, the worst weekly performance in 3 decades. Obviously, demand concerns and the price war between Saudi Arabia and Russia is taking their toll. Some wild movements last week a move of 25% lower on Wednesday, followed by a move of 25% higher on Thursday, and then obviously they fell 11% to close the week. So watch for volatility to continue as OPEC Plus members continue to bicker over supply and demand. We'll also see if U.S. Shale oil producers start to give into the pressure and announce production cuts on their own. We did start seeing some indications of that at the end of last week. That's it for me. Like I said last week, head over to Investing.com's YouTube channel, hit the subscribe button, give us, show some love. You'll get some notifications for when these videos and more videos are released. So may the trading gods be with you this week. Be sure to wash your hands and stay healthy, everybody.